Good afternoon. I'm very happy to welcome to today's expert speak, Mr. Sudipto Roy. He's the head of unsecured assets at ICICI Bank. And in my interaction with him over the last decade, he's a leading thinker in consumer banking and payments. Sudipto is well versed in consumer finance and credit cards, which we're going to talk about today, starting from the portfolio and sales management side, extending all the way to risk management and collections. He has worked extensively in India and China in consumer payments and has built greenfield card businesses in both countries. Prior to his current assignment with ICICI, he's worked with Citibank and Deutsche Bank and was a recipient of Deutsche Bank's prestigious Global Innovation Award. He is currently part of several Government of India and Reserve Bank committees on payments. Welcome, Sudipto.
Hi, Adil. Great to talk to you.
So, Sudipto, before we get into the serious questions, you're passionate about wildlife. Tell us why.
I think as we get more developed, the places where true nature exists are becoming very, very limited. And, the balance of the ecosystem, the balance of ecology is really getting, I would say, squeezed to a small, narrow place where most of these animals survive. And it is a fact that it is a symbiotic process, and we without the animals and the nature actually will not be nothing. So in the places where actually you can observe nature in its sort of truest form, in its entirety, in its raw form, are the jungles and the forests, whether be it in India or anywhere else in the world. And frankly, when you are in a jungle, in a forest, you are away from all the hustle bustle of life, all the office tensions, etc. And it's really a true meditative experience, right? You are alone with the forest and the jungle, and with the animals and the majestic animals like tigers and lions, right? Especially in Gir, in the Gir forest. So that's why I started going to national forest somewhere around early 2000s, and I've been hooked since. Have been going there at least 4 or 5 times a year.
Wow, fantastic. I hope that can restart again soon, Sudipto. So moving to our first set of questions. Now, you lead a large portfolio of products for a very large institution. Tell us how you see the next 5 years in terms of consumer credit demand across these various products. Just lay out the landscape for us.
Okay, Adil. I think it's a great question. If you see, you look at consumer credit I'll put them in 5 buckets, right? One bucket is obviously, I need money right now for a particular purpose, and I need a large ticket funding. So that is what we will call an unsecured personal loan. I require money for periodic payments while dip into credit. That is where credit cards become useful. I need to buy a particular white goods durable, and I need to spend or make it affordable with my income. That is where your EMI programs, or what is now called buy now pay later, becomes important. And obviously you go into the secured products like auto loan, home loan, etc. And it's a progression. Now, India is a very, very young country. Our average age is probably around 26 years of the country, and there's a large amount of people coming into the workforce. So what I do believe is that the first things that the country or a person needs when he joins the workforce is probably a payment instrument like a credit card, and probably if they're setting up home or something like that, newly married, they will require probably personal loan for furnishings and white goods, etc. So those are the products they start with, and then gradually move into auto loans and home loans as they move around the customer life cycle. I do believe that the next 5 years will be really great for growth of all asset products in India, all lending products in India, primarily because the country is growing. The government is talking about taking a $3 trillion economy to a $5 trillion economy. And with that amount of growth, if you're able to grow, then obviously the attendant demands of all the credit products has to be there. Otherwise, credit plays a large role in growth of the economy. Credit fuels consumption. Obviously, we want responsible credit to fuel consumption, not irresponsible credit to fuel conspicuous consumption. But credit definitely fuels consumption. And I do believe that as we continue to grow post-COVID, because I believe that post-COVID, as as normalcy restores, we see a huge, robust uptake of demand. And to serve that robust uptake of demand in terms of consumer consumption, credit has to play a critical role. And that's where, unsecured loans, credit cards, home loans, mortgages, auto loans, they will play a crucial role in sort of funding the demand gap or funding the demand gap. So
Fair enough.
I'm very optimistic about the next 5 years.
Fantastic. So let's double click on two of the products you mentioned. So tell us, what is the outlook for credit cards in the next decade in terms of quantity, spends, competition, innovation, and then talk about BNPL, because I know you have a view on this topic.
Yeah. So, Adil, I think credit cards, we're at about 60 million credit cards in the country right now, give or take a couple of odd million here and there. And if I look at the number of unique customers, right, having in those 60 million, the number would probably be around 35 million people. So in a country of 1.3 billion people, we have only 35 million credit cards. If you look at some of the large issuers in US, for example, single issuer in US, let's look at Capital One. Capital One alone has 90 million credit cards. And let's look at, issuers in Korea. All the issuers in Korea, in such a small country, between them, they have 150 million credit cards. China has upwards of I don't know, what was the last number, 900 million, right? So we really haven't scratched the surface. And I do believe that COVID actually has sort of opened up people to the benefits of electronic payments. When actually you are stuck at home, right, unable to go out during lockdown, the only method that you could pay on any of the e-commerce side or the food delivery side was either use your credit card or debit card and then pay for it, or use your UPI. So these are the three things that you primarily were doing. And people who did not have access to this means of payments obviously have realized that these are not exactly a luxury or anymore. These are necessities of life. And I do believe that the issuance of credit cards, especially by issuers, will be very, very robust. I do foresee a lot of fintech participation in this sector. I do foresee a lot of public sector participation in this sector. Public sector banks, I mean, obviously right now SBI Cards does a large amount of the lifting as a participant from the public sector side. But I do believe that many public sector banks, as and when they start, reopening and rebuilding their business again, I know they will focus on this segment because the segment is high ROE. And the COVID has proved that the banks, with their prudent underwriting, can actually manage risk pretty well. So COVID has proved that you need this. COVID has proved that you need, the banks in India can manage risk properly to withstand that amount of shock or that amount of disruption. And the last thing is that COVID also has hastened digital disruption, or digital, I would say, digital enablement. The amount of work that has gone done into video KYC, the amount of gone into e-sign, into e-NACH signing, the entire, especially for in a bank like ours, we have digitized the entire credit card and personal loan stack. There is very few elements which are being left to digitize. And so as things become more digitized, as the pool for this thing grows, and as the more participants, which is private sector banks, public sector banks, and fintechs grow in this sector, I believe that in the next 3 or 4 years, we will see a great number of issuance, and probably, close to a high double-digit growth rates is what we will see in the cards business. Coming to BNPL primarily addresses affordability. So I do believe that though BNPL might be a new product in developed markets, maybe because people were used to credit cards for financing their purchases. In India, because affordability was always an issue, the EMI business, or that's nothing but a sort of a structured buy now pay later program, has been developed over many years. And banks have played an active participants in that. The fintechs like Pine Labs and Innovity have been sort of the flag bearers in putting the pipes in the retail sector for buy now pay later. I do believe that it's a well-established product in India. We will see investments in this sector in India, and that will also go into the overall consumption growth in the $3 trillion to the $5 trillion growth that we will see for the economy.
Got it. So on what you said on credit cards, right? A lot of high double-digit growth. Now, you've always talked about building profitable portfolios. So, for someone out there, right, who's building out a new portfolio, how do you ensure that you deliver the profit at the end of the day? Just comment on that. Secondly, on BNPL, right? Yes, you're right. India is different because loan on EMI is taken off big time, right? But can BNPL go after the people who can't get a credit card as a standalone opportunity? Can you share your views on these two?
Yeah. So, okay. See, on the first part of the question, what people should be cognizant of, right? If they're building this business de novo, or so one of the things is, when I tell, and this is what I discussed with my team, credit card, the first name is credit. You are giving credit. The form factor is just a factor. It's a form factor. So the fundamental product is credit, and the fundamental product is unsecured credit. So the heart of this is underwriting. Heart of this, and a lot of people, and say, let's take this globally. Credit cards is a high return on asset product, 5% return on asset product. So that means from one customer you will make about 5%, right, of this total outstanding balances, if you run the business well. Now, if one customer goes delinquent, then you require and takes 100%, you take 100% loss on that customer. It will take you 20 good customers to make up loss of one bad customer. And that's unfortunately the sort of the risk ratio in unsecured assets business, both personal loans as well as credit cards. In personal loans, average ROA is about 2%. So for personal loans, if one customer goes bad, you need 50 good customers to make up the loss of one customer. So I think the critical part is that you cannot take your eyes off the underwriting ball. Because if you take your eyes off the underwriting ball, you will take losses at some point of time. And in an unsecured business, at times the losses become unsustainable. Actually, they become, they threaten the viability of the business. Secondly, I think user experience and user journey is very, very important. Previously, the issuance of credit card process, especially, I've been in this business for almost 22 years now. What we had till the early 2010s and 2015s was a highly friction-prone business where everything was physical. And now we have moved into a digital stack, but what I called is that still the stack is phygital. It is not fully digital. And because it's phygital, it still has got pockets of resistance, pockets of friction. The people who can actually eliminate this friction the best will be the winners of tomorrow, right? And whether be it a fintech, whether be it a private sector bank, whether be it a public sector bank. So friction in the application process is something that you have to keep a close eye on. Last but not the least is, you will have to deliver good service. That is true in any business. Your net promoter scores, you have to be sort of maniac about that in maintaining good net promoter scores, because a satisfied customer is a happy customer and is going to continue to transact with you. And when there will be many offerings from the market, there will be, temptations of the customer to move here and there. So the only way for you to retain the customer, or a deal-seeking customer, a deal-seeking millennial customer of today, is to deliver stellar customer service and sort of exceed his expectations. And last but not the least, this is for the business managers. Do not fall into the continuous trap of discounting. A lot of people have a thought process that, no, I will discount right now. This is my customer acquisition cost. This is my customer activation cost. But in a business like cards, it becomes unsustainable after some point of time. Right? I would suggest that they should build their value propositions on customer experience as well as on service. Yes, you have to burn some money at times to keep the customer interested and engaged, but that should not be overdone because it becomes unsustainable over a period of time. The second part of the question is a buy now pay later, right? I do believe cards and buy now pay later will coexist. There will be a greenfield buy now pay later business, and there'll be a large EMI financing which is buy now pay later on credit cards as well, right? So see, the opportunity in India is very huge. Both of them have enough space to grow.
Fair enough. Now let's talk about what COVID has done, right? From a consumer's credit need perspective, what are the learnings that we've seen in the last 1 year?
So, two sides of learnings, some good, some bad, right? So let me talk about the good first. The good has been that many of the customers actually have sort of understood the power of digital payments, understood the power of having digital credit, and used it responsibly during this period. During this period of great disruption, they have used it. So I do believe that digital payments and during the times of COVID actually has helped a lot of people run their houses smoothly in terms of conducting commerce. I do believe that in terms of consumer finance, as well as consumer finance actually went through a slowdown during the lockdown period. So the industry actually saw a contraction, but we saw demand come back in around October, November. Demand come back in a big way. And frankly, during COVID, a lot of people actually discovered that XYZ things don't work in their home. That needs to be replaced or that needs to be upgraded, right? So we see a very robust demand for consumer finance, especially on consumer finance, both on EMI on credit cards as well as in greenfield consumer finance on mobiles, on white goods, on durables. So we see a very good, robust demand post October that is happening in this segment. There have been a set of customers who have been adversely impacted because there are certain sectors in the economy that went through a crippling sort of contraction, like travel and entertainment, the restaurant sector, etc. So people who are sort of associated with this sector actually have been impacted. A lot of self-employed were impacted as their collection flows dried up. So there have been some customers who have been negatively impacted and they have slid into NPA. However, government has tried to, and together with the Reserve Bank of India and the banks through the moratoriums as well as the restructuring process, have tried to give them a soft landing. The ECLGS scheme for MSME has also been actually quite well received. So one of the learnings I think for consumers out of that is that don't overextend on credit. Overextension credit is a great tool if you use it responsibly. If you overextend yourself on credit, then if there are sudden shocks, you will get into trouble. And once you get into that trouble, to climb up of that hole is a Herculean task. So use credit responsibly. I think customers have understood it on both sides during COVID.
Makes sense, right? Like you said, it's a very, very powerful tool if used prudently. Now, in terms of technology, I think you already covered it. We've seen in terms of new customer onboarding, video KYC, e-sign, e-natch, all game changers. Sitting in your house, you can get a product. What have been the learnings on the credit cost or the risk side in COVID, Sudipto?
So without going into specific numbers, Adil, obviously the industry saw elevated costs. When you have disruption of such a size, there will be elevated cost. You cannot escape it. However, as I said in my previous answer, the moratorium period gave the customer a breathing space. The restructuring has given some really stressed customers a longer runway to pay. And also the government schemes like ECLGS, etc., has given a lot of MSME customers a reasonable amount of stimulus to rebuild their businesses. The credit costs were elevated for some time, but we are seeing normalcy coming in. I think the worst is over us. We see a robust resumption of demand, robust sort of credit card spend, which is actually a proxy of demand coming back. So I do believe that the worst is over. So in terms of credit costs, though they're elevated, it is not something that the industry cannot manage. And that is, I give all credit to the industry that they've been prudent in their lending decisions. They have actually relied on bureau data very extensively. They relied on aggregate debt burden calculations, maximum unsecured exposure calculations while issuing. So all that discipline actually has held. Some portion of customers got impacted, but the large proportion of the portfolio remains quite
fantastic. Fantastic. So I think we've also seen a phenomenal consumer response or demand on credit card. People think it's a necessity. December this year was 20% higher in terms of demand at Bank Bazaar compared December last year. So the data is exactly what you're saying. Consumers are asking about personal loans, Sudipto. So while credit card issuance has come back, credit card spending has come back, right? What kind of expectation should we set with consumers in terms of the personal loan supply coming back to match the demand that's there in the market?
Yeah. So as you see, when you have sort of disruption of this, in the scale of the lockdown that India saw, uh, obviously as business managers, one of the things that we are always bothered about is risk. So one of the ways you manage risk is that in uncertain times is you take up the gating criteria, right? What you would normally lend in a normal BAU scenario, in a stressful scenario, those bars become much higher. So, like all issuers and all lenders did that during the pre-COVID period. So, which led to a little bit of contraction on the issuance of personal loans primarily. But from the month of January, we are seeing normalization in the process. Our credit outlook also has been normalizing. Some of the gates that were made higher during the lockdown period and the post lockdown period, those gates are being gradually lowered. We remain cautious because, as we said, we are not yet entirely out of COVID, and we have seen resumption of some of the lockdowns, etc., in the Western economies. So we remain cautious. However, we are also now opening up opening up a little more widely. I do expect that if there is no further growth of COVID, or growth of or any negative news relating to COVID that happens adversely over the next couple of months, I do believe that normalcy in personal loans will come back in the month of March, which is next month.
Okay, fantastic, fantastic. Now let's move to the third and final topic that we're going to discuss today. So you've built, right, successful tech partnerships. First, just share with us what is the learning in how to build a successful tech partnership.
Yeah, I see. We have been doing a couple of partnerships with large established players in the tech space, as well as many fintechs. And one of the sort of crown jewels in our efforts is our Amazon ICICI Bank credit card co-brand, where probably we are the fastest co-brand issuer to scale 1.5 million cards issued. So. One of the guiding principles that we have in ICICI Bank about partnerships is that we operate in complete faith and trust with the partner. For us, the partnership is an open partnership, and we transparently share with our partner in any sort of deal that we sign, is that what is it in it for us, what is it in this for them. So that is what we do. So the fundamental underpinning of a successful partnership is trust. The second thing, obviously, I do believe is technological compatibility. Now, if you fintechs and large tech organizations are technically nimble, and they expect the same amount of technical nimbleness from the partner. We as a bank, we pride ourselves as being very technically nimble, and thankfully, I think we have been able to match the expectations of many of our fintech partners, especially either with the sophistication of our solutions as well as with our speed of implementation, because these two things are important. The third thing, obviously, is to see if you can mutually leverage each other's data, right, to get to a much more sound underwriting decisions. By leveraging data, I do not mean that handing over each other's data. That's obviously you cannot do. But what you can do is that you can intelligently work on certain proxies by which that if there is a customer who is coming from the other side, if there is a score for that customer, whether that score correlates with your risk parameters or not. Through data room exercises, you can actually build a correlation between the scorings and credit scoring, as well as if you want transaction scoring of both the partners. And that can be done very successfully without handing over data to each other. Right. Once those models are built, obviously those models have to be calibrated every 6 to 9 months. But once those models are built, then you can actually leverage each other's data or each other's expertise very well and build a seamless underwriting process. Now, those seamless underwriting process is actually the heart of any partnership, especially in the business that I am in, or in the business that I am involved in. Because unless you're able to trust the data or the input which is coming from your partner, you will not be able to take a sound underwriting decisions. And that is why some of the sort of the proxy scores, etc., that we get from our partners actually go a long way in making sound underwriting decisions. So it requires sophistication in everything. It requires sophistication on technology. It requires sophistication of the credit administration process. It requires sophistication on your customer acquisition process. But I think the most important thing is trust between both the partners. Trust and cooperation between both the partners. You have to work with your partner as a team. Unless you work with your partner as a team, I don't believe that success can happen in partnerships.
Thanks for sharing that insight, Sudipto. So, if you look out 5 years, right, how do you see this playing out between large financial institutions like the large banks, right, and fintech partners? Just telescope out 5 years and tell me what things are going to look like.
So I do believe there is a lot of talk in many forums. Are a great threat. I personally don't think so. That has been one of my viewpoints I keep forward at any forum always, because banks have their own mandate. Banks are highly regulated, though some fintechs are regulated, but banks are much more highly regulated. So banks are the arbiters of trust of the public, and as long as deposit-taking banks and deposit-taking financial institutions retain that trust, banks will always remain important in any scheme of things. What I do believe is that where some banks lack in user experience, or where banks lack in expertise that a fintech can bring to the table, right? A collaboration with a fintech will actually make the bank's processes much more stronger, make the bank's customer much more happier. And also for the fintech, the mutual customer that the fintech shares with the bank, that customer will get a great user experience. And the fintech, on the other hand, will also get a share of the revenue from that transaction, which will it might lead to unearthing of many revenue streams which were not there before. So I do believe that fintechs are the exoskeleton on which banks will become stronger. Smart banks will become stronger. So it's a great partnership, and I do believe that it's a great symbiotic partnership. And I do believe that in 5 years, there'll be hardly any sphere of banking activity in which fintechs will not have influence, and fintechs will not have collaborated with banks.
That's fantastic perspective for the future. Thanks for sharing that. Now, in terms of existing to bank consumers versus new to bank consumers, right? With now tech coming in with video KYC and quick onboarding, for the large banks, how important is new to bank going to be, Sudipto?
See, especially let's talk about credit cards, right? We are at about 60 million cards right now. The opportunity is very, very large. So unless you go and start issuing to new to bank, this pie won't grow. One of the problems of issuing new to bank had been access, had been, insights, credit insights, credit insights, and also the bureau penetration. Bureau has a large number of records. We are getting credit insights now, leveraging the mobile number, etc. So those are useful. We are building credit insights, seeing that even the debit card transaction data can be used to build credit insights. So I do believe that there are examples of social media scores and social data being used during credit underwriting process. So I do believe that in underwriting new to bank, some of these processes or some of these adjunct credit insights, etc., will become very, very important. And as origination frauds go down, because the digitized process automatically brings down fraud, right? The banks will be far, far more confident to take some of those risks and move into new to bank issuing in a far greater way than what they've been doing so far. And this is a place where banks will lean a lot on fintechs as well.
Fantastic. So, Sudipto, I think 30 minutes are up now. So, my last question to you, and this is more as a business leader. You're managing a large team. 2020 was a tough year, but the future is very, very, very bright, right? How do you keep the energy up, both personally and for your teams?
I think one of the things that you should, and this is my personal discipline, is that you should not bring worries from office home. And sometimes it is unavoidable, it comes, right? But typically you try to separate your personal life and professional life. Keep a very healthy interest in your professional life in terms of learning and reskilling. I think learning and reskilling is very, very important. The world is moving forward at a breakneck speed, right? And for every professional, no matter how successful you are or no matter what position you are, you have to always remember that if you do not reskill yourself, you might be redundant 2 to 3 years down the line, because you will not have kept up with the development. So that is, personal reskilling is very, very important. But you should find your time to relax. You should develop a hobby of your own, which you actually helps you to detach from all the stress. And I guess the balance of that, it is not always easy, but you should always keep an attempt at it. If you try it, it will happen. It does not happen normally, but it takes an effort. And once it happens, you are able to separate your personal and professional life, and that gives you the energy to go on.
Fantastic. So, Sudipto, thank you very much for being so open, for sharing with us basis your learnings, right? These insights on how consumer credit and retail credit is evolving. I enjoyed this conversation, and I'm sure our viewers did. So, thank you for your valuable time. Goodbye.
Thank you, Adil. It's been a great talking to you. Thank you.
Thank you.